The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Okay, it is Thursday, the 8th of May, VE Day, and along with the VE Day celebrations and the memorials around that, there's been a few other things going on, Jeremy. How's your week been?
Well, yeah, what a time to be alive, eh? We have UK rate cuts, we've got trade deals with India and the US, the Lions squad has been announced, and we've got a new pope. So it's all getting a bit too much, really.
There's something for everyone, isn't there?
I know which one I spend most of my time analysing. Yeah. I'm very glad that Maro Itoje has been named as the Lions captain. I haven't heard who the new pope is, and I think all these trade deals are probably all about headlines and politics and much less about actual stuff happening on the ground. And I think there's probably still quite a lot to be negotiated, particularly the US one.
Yeah, genuinely barrage of news on all fronts. And I think among all of that, it's quite easy to lose sight of which deals really matter and which don't. So, I'd be interested to hear your views on either the India-UK deal or what's been announced today in terms of what we're doing with the US.
Yeah, I think it's political largely, particularly the Indian deal. I don't think it's significant. I think the headline number was $5 billion.
Pretty small, yeah.
And I suspect it was a deal that was rushed through to coincide with the timing of the deal with the US. As for the US deal, I think the politics there work for both sides. But I think the timing of this deal from the US perspective was political. I think the UK proposal has been sitting on Trump's desk for several weeks. And I think he's chosen the timing now, as he regards it, to coincide with a great historic day for victory in Europe, so he can project his histrionics.
Yeah.
I think the fact that it's UK ahead of the EU is significant for him. And also to slide it in there ahead of Scott Bessent and the US delegation meeting with the Chinese trade delegation to talk the bones of a trade deal in Switzerland this weekend. So everything's coming together and it's still very stage managed, and Trump is getting all the PR he can from it. Obviously, it's good that we're getting a trade deal. I don't think it's had a big impact on the currency. I think it should help sterling. It should help our sovereign debt situation in terms of our borrowing costs. But it's all at the margin. And in terms of the few lines I've read about the UK-US trade deal, British farmers will be given some tariff-free quotas for exporting beef. We're going to get similar quotas on cars and aero engine parts. Apparently, there's a UK airline that's agreed to buy $10 billion worth of Boeing aeroplanes.
Okay.
And Donald has told us that this is a tremendous deal for both countries. And then he went on to say that he predicted that investors would get even more encouraged if Congress passes a law extending his tax cuts. So he said, if that happens, on top of all these great trade deals we're doing, this country will hit a point where you just need to go out and buy stocks now. What a guy. I mean, he's not only doing all these trade deals, he's looking after his citizens by giving them stock tips.
There really is something for everyone, isn't there? Including recommendations from the president of the US. That is great. But seriously, I imagine Trump's enjoying the fact that the EU is being made to wait and the UK is getting favourable treatment, because I think that sort of plays to his power and his ability to do that. But that probably also is good for Starmer, because he can show that the UK is up there doing these deals towards the front of the queue, even if there is a bit more work to be done in terms of the detail. So
yeah, no, I think overall it's a good thing. It puts the UK in a good light. So I think we should take the win. Obviously, a few other things have been going on. We've had, I would say, quite an interesting non-event with the Fed decision to keep rates on hold this week. And Powell, I think, is storing up trouble. I think Donald's a bit busy with other matters at the moment, but I think when he gets round to it, he's not going to be best pleased with our friend Jay Powell this time round, because obviously Donald would like him to go faster on cutting rates, and he didn't do that. And what he also didn't do was really make any sort of distinction between his dual mandate of inflation and growth about which worried him most or which would carry most weight in the near future on Fed policy. So I just think it's quite interesting that we've got the Federal Reserve saying tariffs create uncertainty, so therefore we're not going to do anything. Whereas we've got the governor of the Bank of England cutting rates because of, trade tariffs.
Mm. And is there anything sort of written into the rules about which of those two elements, inflation and growth, are the sort of the dominant one, or is it really up to each Fed chair to make their decisions? Because any time I've looked at central banks and their mandate, it's all been about inflation. So it's easy to assume it's mainly inflation with a bit of growth. But I'm sure Trump would probably say the opposite.
Well, actually, it's employment rather than growth. But obviously, You need growth to get employment. And at the moment, US employment data remains pretty robust. So, I think there are people out there that would say that what Powell is doing is political. It was only in September last year when the concerns over the economy were such that they cut rates by 50 basis points. And now he's concerned around greater uncertainty due to what Trump has been doing. And he's saying the best move is not to do anything. I think that what will result from this will be a continuation, a spat between Trump and Powell. Albeit, I think that what we have established since the last time is that Powell's job is now safe because Trump has been convinced by people around him that he would open up a whole can of worms were he to pursue Powell at this moment.
Yeah, that market reaction was really quite scary, wasn't it? For a few days, it was really pretty dramatic. And I guess in Powell's defense, we're in quite a strange situation where you might get a potentially contracting economy, but with quite high inflation accompanying that because of the tariffs. So there's a kind of mechanical problem in there that wasn't there late last year when they cut rates the way they did. So we'll see what Donald thinks when he has time to focus back onto this stuff. So
And of course, the other thing that happened over the weekend was that Trump heightened the sort of trade war uncertainty by suggesting that non-US film production would be his next target, which seemed to be quite a random suggestion. I mean, there's been no details on how this might work, and it's difficult to know how it actually would work in practice. And, the reason why services don't attract tariffs is that it's very difficult to imagine how you would make charges or tariffs stick on services such as film production. So I think it's probably a bit of a red herring, but it certainly overshadowed a few names in the UK this week who updated investors, like two smaller companies like Facilities by ADF, which provides the equipment for film and TV production in the UK, and for Zoo Digital, which I know you follow closely.
Yeah. And that's probably not a bad time to talk about some of the UK news for the week, actually, because there has been a fair bit. Yeah, let's start with Zoo. And in terms of progressive clients, there really been two bits of major news this week. One of them was Zoo Digital and the other one was Van Elle. So, Zoo Digital is involved in subtitling and dubbing for the big streaming content producers. They had a trading update. It wasn't great news. The year to March 2025 was not a brilliant finish to the year. So there was a little bit of disappointment there, but the bigger news was reduced guidance for the year to March 2026. So quite significant downgrades in terms of revenue. Also downgraded in terms of profitability, but they've been cutting costs and they're continuing an aggressive cost-cutting program across the business. And it really has been pretty grim for Zoo over the last several years. Obviously, you had COVID, then there was the writers and actors strike. Then there's been a lot of goings on in terms of change priorities and M&A amongst their customer base, the ongoing threat or worry about AI, and now, as you mentioned, the tariffs announced by Trump over the weekend. So there's been a litany of pressures and difficulty that they've been facing. It's just a matter of them hunkering down and waiting for those markets to recover. So difficult news from Zoo Digital. Shares are off, I think, 8 or 10% on the back of that news. Better news, though, from Van Elle, which is a ground engineering contractor in the UK construction space. They did what looked like quite an old school outsourcing deal, actually. They've effectively sold off their haulage machinery, that number of large trucks, I think cranes and various other large vehicles that they use as part of their engineering works. They sold those off, so they actually received just under £3 million for the disposal of that equipment, but they sold it to a specialist logistics provider. So They'll be then renting them back as and when needed. And obviously that logistics business can make them available to other customers. So it's a traditional sort of outsourcing process and frees up a decent chunk of capital, just under 3 million, as I said, for Van El to deploy elsewhere. No other change to forecast. So it's not like that's come at a huge cost to the business. And it does allow them effectively to stick to the knitting and get back to applying capital into that engineering space where they're specialists. So it seems like a good deal. Shares are actually up almost 10% as we're speaking today. So it's been very well received by investors. But there's been a bit of other news going on. In particular, we've had the divergent fortunes of Alpha Group and Argentex, the payments management businesses. I know you had a few views on those. There's a real story to tell there, isn't there?
Well, it was like we were talking last week where we were saying that one of the ways for a company or companies to mitigate risk is to become more resilient. And one way you become more resilient is particularly as if you have a strong founder-led mentality. And my history with Alpha Group and its founder, Morgan Tilbrook, I think is very instructive of exactly that kind of culture. Now, Argentex we've spoken about, and the shares came back from suspension, but I think it's unlikely that shareholders will get much upside from here. Whereas Alpha Group, it emerged last Friday, in fact, after the market closed, that the US-listed payments company Corpay were interested in making an all-cash offer for Alpha Group, which quite quickly on Tuesday morning, the Alpha Group board rejected. So the Alpha Group share price has gone up a bit on the back of that. So it's done tremendously well, but essentially faced the same risk profile that Argentex did. And Alpha Group handled very well a series of events during lockdown, not dissimilar to the current environment of extreme FX volatility, which basically created liquidity problems and then a credit problem among one of its larger customers. And I think the type of problem one suspects confronts Argentex right now. And I think the way that Alpha Group handled that period and the plan of action they put into place, including an equity raise that they led and the learnings that they put in place in terms of their risk control metrics following that period, has built a more resilient business. And regardless of whether Corpay eventually does acquire Alpha Group, and I would in some ways be disappointed if that were to happen, I think it vindicates Alpha Group's strategy, but also vindicates how important it is to distinguish between differing risk mitigation strategies that companies have who very often face similar risk profiles.
It's the age-old, what doesn't kill you makes you stronger. And it feels like Alpha Group have managed that and learned it to their advantage. And poor old Argentex, it came along, it was such a big test of their resilience that they basically failed the test. And that's been dramatically to the detriment of their investors. So yeah, we'll keep a close eye on that going forward. In the near term, though, what have we got over the next 7 days? Is there any dramatic news planned for next week?
Yes. The economic data coming out next week, we've got UK unemployment for March, which is expected to be unchanged at 4.4%. We've got US inflation data for April, which looks like it's going to be heading up a notch to 2.6%. We've got UK March GDP data. Again, it was expected to be coming quite a bit below the unexpectedly strong figure of 0.5% in February, probably around flat to 0.1. We've got US retail sales for April, again showing probably a sharply negative figure from the plus 1.4% we saw in March. And on top of that, we've got some consumer sentiment indicators from the University of Michigan, which come out later this week, quite widely followed. And I think there's going to be quite a few eyes on that, given that we're now at the moment of measuring the consumer reaction to the potential impact of tariffs. So.
Yeah. Lots of opportunity for Donald Trump to either be very angry with Jay Powell or vindicated in his view. So we wait and see what.
Well, we better finish there because we've both got to get off and buy some US shares, as Donald just told us to.
Right. Let's listen to Donald's stock picking. Exactly. Good stuff. Okay. Well, great to speak to you. Good to catch up again. And we'll speak this time next week.
Look forward to it.
Talk to you then.
Brought to you by Progressive Equity.